Hello everyone. Today we'll be taking up with fifth lecture of contract costing. In that lecture we'll be covering up four questions. Question 3, 4, 25B and 28A. Now question 3 and 4 are new points. So this I will be doing on the screen, and 25B and 28A are repetition of the previous points. So I'll just discuss the questions and you will be doing it in the homework. Okay. So two questions I'll do on the screen and two questions would be your homework. Now, in this question 3 and 4, new point is covered, which is escalation clause in the contract. It's an important point. You'll find this theory in your study material also. You can open the page of theory of this particular chapter. At the end, we left out this point in the beginning. I had discussed that escalation clause. I'll explain you later on when we come to those kind of questions. So just before your practical examples, you'll find this point in theory in your study material. Understand what is the meaning of escalation clause. Escalation clause in contract employs a contract to employees. It should be employs a contractor to revise the price of a contract in case of increase in prices of inputs. Inputs means material like steel, iron, cement. These are the materials used in the contract. Wages. Okay. These are the inputs used in the contract. So contractor to revise the price of a contract in case of increase in the prices of inputs due to some macroeconomic or other agreed reasons. Now see, you all will agree that contract means a large job is undertaken. It takes more than 1 year to complete the contract. So suppose you enter into a contract with someone and the contractor says that your building will be completed in 5 years. I repeat, it will be completed in 5 years. Now presently he gives you a quotation or a tender that the total cost of constructing the building will be 2 crores. But the time frame is very long, 5 years. So is it quite possible that in this 5 years, the price of raw materials like iron, steel may go up, the price of wages may go up? He has made the contract cost 5 crores on the basis of current prices. Okay, so he may argue that 5 crore is the contract price, but if the price of materials and wages go up in future, then you have to pay little more than 5 crores. He may put such a condition in the contract. This condition is called escalation clause. Escalate means to increase. Okay? Escalate means to increase. So if the price of inputs like materials and wages go up in future, then contractor puts a clause in the contract. If they are likely to go up in future, contractor puts a clause in the contract, condition in the contract, that he will charge you more money in future if these prices go up. Such a clause or condition in the contract is called escalation clause. Look at it once again. Escalation clause in contract employs a contractor to revise the price of the contract. Revise means generally increase. In case of increase in the prices of inputs due to some macroeconomic or other agreed reasons. A contract takes longer period to complete, and the factors based on which price negotiation is done at the time of entering into the contract may change till the contract completes. Okay, the prices may change till the contract completes. This projects the contractor from, it should be protects. This clause always protects, not projects, protects the contractor from adverse financial impacts and empowers the contractor. Okay, here also it should not be employs, it should be empowers the contractor to recover the increased prices. Okay, it empowers the contractor to recover the increased prices. As per this clause, the contractor increases the contract price if the cost of materials, employees, that is wages, and other expenses increase beyond certain limits. See, minor increase is okay. If the contract is of 5 crore and there is an increase of 10, 15, 20,000, that's okay. He will ignore it. But in 5 crore, if the price of material has gone up by lakhs of rupees, then he cannot bear that loss. He has to charge you for the increase in prices. So beyond certain limit, up to certain limit, he may not increase the price. He will sacrifice it from his own profit margin. He will sacrifice that from his own profit margin. But beyond a certain limit, if the prices of the materials and wages go up, then he will charge you more for the contract in future. Inclusion of such a clause in contract deed is called an escalation clause. So once again, let us understand what is an escalation clause. Escalation clause is basically a clause or a condition put in the contract that if the price of inputs like material, iron, steel, cement, wages, if the price of these things go up in future, then contract price will also be increased in future. Okay, and also if they go up in future beyond a certain limit, then the contract price will be increased. Such a condition which is put in the contract is called escalation clause. So this question 3 and 4, which are the new ones, I'll be taking up today. This has not been asked in exams in past. They are the new points covered in college in the current year. So extra practice is not there. You are advised to repeat question 3 and 4 again and again to understand the same. Look at question number 3 of your study material. Everyone understand this? Profit recognition with notional profit. A contract for construction of building I governed by an escalation clause in respect of the prices of, see, these are the inputs, steel, cement and stone. These are the materials or inputs which are used in constructing the contract. So there is an escalation clause, means there is a clause that if the price of steel, cement and stone goes up in future, it increases in future, then contract price will also be increased. The price ruling on the date of tender for the building and actual price paid by the contractor were as follows. Means, what was the price of steel when we submitted the tender? 610 rupees. But later on when the contract was executed, we actually landed up paying 675. This is a huge difference. Same way, what was the price of cement? And this all was per ton. Here also make it per ton. What was the price of cement per ton when the tender was submitted? 100 rupees, but we actually paid 105 rupees. And what was the price of stone per 100? CFT means cubic feet. Okay, CFT means cubic feet. This is the quantity measured in feet. So stone price per 100 cubic feet was 40 rupees when we submitted the tender. Now here it has gone down. So if it goes down, then also you can give the benefit to the client contractee. That is also a part of escalation clause. Okay, in the clause what is mentioned is revise. Revise means it may go up also and it may go down also. So basically it protects the contractor also and contractee also. Okay. So these are the three inputs. Okay, when we submitted the tender, the price of steel and cement per ton was 610 and 100, which actually we paid later on. They increased to 675 and 105. When we entered into the contract, the price of stone was 40 rupees per 100 cubic feet, which later on goes down to 38 rupees per 100 cubic feet. Now, 3 lakh cubic feet reinforced cement contract was laid in the building. So total 3 lakh cubic feet of space has been covered and cement has been used in the building. If 100, LBS means pounds. Okay, LBS means pounds. So if 100 pounds of steel, 2,400 pounds of cement, and 100 pounds of steel, 2,400 pounds of cement and 90 cubic feet stone are the net quantities required to cast. To cast means to construct 100 cubic feet of RCC. RCC means reinforced cement concrete. Okay, here this is RCC, reinforced cement concrete. To construct 100 cubic feet of this RCC, we require 100 pounds of steel, 2,500 pounds of cement and 90 cubic feet of stone. Then for 3 lakh cubic feet construction will require how much? That from this we will be able to get the quantities required. Okay, from this information we'll be able to get the quantities required for steel, cement and stone. Okay, further, and wastages are also there. 5, 3 and 10% respectively, means if you construct, then some steel will get wasted, some cement and stones will get wasted. So that wastage is also to be taken into consideration, because we pay the price for full material, but then used is more because the material is getting wasted. So if 100 cubic feet requires 200 of material, you are basically buying 220 of material. Why? Because that 20 may get wasted. Okay, so you have to pay price for the higher amount. Calculate the difference. It should be difference, not different. Difference in selling price according to the escalation clause. And they have given you the information that 1 ton is 2,240 pounds. So this pounds we will have to convert into tons, because the price 610 is per ton. That's why this conversion information is given. Assume that the wastage percentage is based on the net quantity of material. So how to find this escalation? All of you understand this properly in the question. First you all make this table. Which table? Input for 100 cubic feet. Because why for 100? Here this 100 pounds, 2,400 pounds and 90 cubic feet are required to construct 100 cubic feet of RCC. So in the table you mentioned for 100 cubic feet of RCC, this much is required. So for 3 lakhs, we have to construct 3 lakh cubic feet of RCC. So for 3 lakhs cubic feet of RCC, how much quantity will be required? Then we will include wastage and then we'll convert. This pounds we will have to convert into tons. So this conversion also will be required. All of you pause the video and make this small table with 3 rows. Inputs will include 3 things: steel, cement and stone. So make this table. Yes, I hope all of you would have done this table. Now understand this. Very first input is steel. So all of you write down in the input column steel. Okay, now steel. Understand this workings for steel, what we are doing. And then all of you can try the similar workings for the other 2 inputs on your own. Cement and stones, all of you can try on your own. And then you can verify whether you got it correct or not. So how do we find the required quantity for steel? Understand this. See, for 100 RCC, for 100 cubic feet of RCC, 100 pounds of steel is required. So here for 100 cubic feet of RCC, here also you write 100 pounds of steel is required. Okay, 100 pounds of steel is required. So here we'll make the calculations for 100 cubic feet of RCC. 100 pounds of steel is required. So for 3 lakhs, okay, here you all can see we are going to construct 3 lakhs cubic feet of RCC. For 3 lakhs cubic feet of RCC, how much steel will be required? 3 lakhs into 100 divided by 100. 3 lakhs itself will be required. You can say 3 lakhs pounds of steel will be required. So in this RCC column, all of you write down 3 lakhs. Okay. Now wastage is, you all can see here in case of steel it is 5%. Okay. So if against 3 lakhs wastage is going to be 5%, then we will order 3 lakhs plus 5% including the wastage. What we will order is 3 lakh 15,000. Do it everyone in calculator. 3 lakhs plus 5% wastage. 3 lakhs 5% is 15,000. So we will have to order 3 lakh 15,000 pounds. Required is 3 lakh pounds, but 5% is going to get wasted. So 3 lakhs plus, and that is given of net quantity. So net quantity means if net quantity 3 lakhs is required, 5% wastage 15,000, we will have to buy 3 lakh 15,000 pounds. Now what is the conversion? 1 ton is 2,240 pounds. So all of you do in calculator, 3 lakh 15,000 pounds required divided by, okay, divided by 2,240 pounds. So what would that be equal to? 3 lakh 15,000 divided by 2240 means in tons you will require 140.625. You can say 140.63 tons will be required. 1 ton is 2240 pounds. So if 3,15,000 pounds are required, then divide by 2240. How many tons of steel we will have to purchase? 140.63 tons of steel we will be required to purchase. Okay, I hope everyone is clear with this. Now, after steel, we do the similar calculation for cement. All of you see what information is given for cement. For 100 cubic feet of RCC, here see for 100 cubic feet of RCC, 2,400 pounds of cement is required. Okay, for 100, 2,400 pounds is required. So for 3 lakhs, how much? So all of you can try the working on your own, pause the video, or if confusion, then you can write along with me. For cement, again we will make the similar workings. For 100 cubic feet of RCC, the cement required is 2,400 pounds. So for 3 lakh cubic feet of RCC, how much cement will be required? 3 lakhs into 2,400 divided by 100. Do it everyone. 3 lakhs into 2,400 divided by 100. 72 lakh pounds of cement will be required to construct 3 lakh cubic feet of RCC. Okay, so here 72 lakhs pounds of cement will be required. Now, we require 72 lakh pounds of cement, but there will be 3% wastage. So we'll have to order more, we'll have to buy more. How much more? Okay, 72 lakhs plus 3%. So we will have to buy how much? 72 lakhs plus 3%. Do it everyone. 74 lakh 16,000 pounds we will have to buy. Now 74 lakh 16,000 pounds means divide by 2240. It will be equal to how many tons? Okay, 74 lakh 16,000 pounds divided by 2240. That will be equal to 3310.71 tons. 3310.71 tons of cement will be purchased. Now same way we do it for stone. See here, for 100 cubic feet of RCC, 90 cubic feet of stone is required. So let us make the working for stone now. For 100 cubic feet of RCC, the stone required is 90 cubic feet. Both are in cubic feet only, not in pounds. So for 3 lakh, we have to construct 3 lakh cubic feet of RCC. For 3 lakh cubic feet of RCC, how much of stone will be required? Do it. 3 lakhs into 90 divided by 100. 2,70,000 cubic feet of stone will be required. Okay, how do you get this? 3 lakhs into 90 divided by 100. So how much of stone will be required? 2,70,000 cubic feet of stone will be required. So that we put it in the table, that for 100 we require 90 cubic feet. So for 3 lakhs we require 2,70,000 cubic feet of stone. Now here the wastage, 2,70,000 cubic feet of stone plus 10% is the wastage in case of stone, because when you cut the stone it gets wasted. Cements and others are lesser solid quantities than stone. So 10% means 27,000 more. That comes to 2,97,000. So 2,97,000 cubic feet of stone will be required. Now here conversion is not to be done because 2,97,000 is in cubic feet, not in tons, rather not in pounds. So we have to calculate in cubic feet only. Okay, it remains same. No conversion is required. Conversion is required where you have to convert pounds into tons. Okay, because here the price is per ton and quantity is in pounds. But here the price is also in cubic feet and quantity is also in cubic feet. So in case of stone, the conversion is not required. I repeat, steel and cement, the quantity is given in pounds, but the price is given in tons. So we convert it into tons. In cement, the quantity is also given in cubic feet and price is also given per 100 cubic feet. So conversion is not required. Now all of you make this final table of input, tender price and actual price. Pause the video and make these three columns: input, tender price and actual price. Difference of tender price and actual price, the price which has gone up will result in escalation clause. Pause the video and make these columns. I hope all of you have done it. So first we do it for steel. Okay, what is the tender price? The tender price, all of you can see here, is 610 per ton. We require how many tons? 140.63 tons. So what is the price we had quoted? 140.63 tons multiplied by the price is 610. The price what we quoted was 610 rupees, 610. So that comes to how much? Or if you do it, 140.63 tons into 610, do you all get 85,784.3 rupees? Whereas actual price is 140.63 tons into, instead of 610 we paid 675 rupees. So for the same quantity we have paid how much amount into 675? Do it all of you, into 675. That comes to 94,925.25. This much more we have paid the difference amount. Same way, let us do it for cement. Now for cement, you all can see the quantity is 3310.71 tons. So 3310.71 tons. 3310.71 tons multiplied by the tender, the quotation was submitted for 100 rupees. So into 100. The tender price what we submitted was into 100. That comes equal to, do it everyone, 331071. But instead of 100 we have paid 105. So 3310.71 into 105. We have paid 3,47,624.55. Okay. And same way we do it for stone. Okay, for stone, first of all, this 40 rupees is the price per 100 cubic feet. So can I say 40 divided by 100 per cubic feet is 0.4. And same way 38 is also per 100 cubic feet. So per cubic feet we are paying 38 divided by 100, 0.38. Okay. So these prices we will take 0.4 and 0.38 because we are directly having the quantity in cubic feet only, 2,97,000. So for 2,97,000 cubic feet, what is the price we would have quoted? 2,97,000 cubic feet into price per cubic feet is 0.4 tender price. Okay, so that comes to 2,97,000 into 0.4. That comes to 1,18,800. But we actually paid 2,97,000 into 38 paisa, 0.38 per cubic feet. So we have paid 112,860.0. Okay. I repeat, why did we do this? 40 upon 100 and 38 upon 100. The prices 40 and 38 are not per cubic feet. They are per 100 cubic feet. So we first find the price per cubic feet and then we multiply by 2,97,000 cubic feet. Now do in calculator everyone. 85,784.3 plus 331,071 plus 118,800. The total value is 5,35,000. The total tender price what we would have submitted is 5,35,655.3. Against that, what is the actual price? 94925.25 plus 347,624.55 plus 112860. So what is the actual price we have paid? 5,55,409.8. So what is the contract escalation? What is the main question asked in the exam? See this. Calculate the difference in selling price according to the escalation clause. So all of you write down this at the end. As per escalation clause, the difference in selling price, okay, the difference in selling price is equal to 555,409.8 minus 535,655.3. That comes to 555,409.8 minus 535,655.3. That is 19,754.5. This much overall increase in price has taken place. Okay, so this is how we find the increase, and this type of thing is very important from now MCQ point of view. They can very well ask you the escalation clause questions in MCQs, calculation based. Okay, now one more question is there on escalation clause, that is question number 4. So that we will solve entirely right now. So all of you take out question number 4 of your study material. Look at question 4. Deluxe Limited undertook a contract for rupees 5 lakhs. So that is the contract price. No entry for that because we have incomplete contract. So it could be used just in the workings. Okay. We have been discussing this in so many questions. Now, they undertook the contract on 1st July 2018. Keep it in mind, it's not a normal year ending April to March. We took the contract on 1st July 2018. And on 30th June 2019, when accounts were closed, the following details about the contract were gathered. So we have to make the contract account for the year ending 30th June 2019, not 31st March, 30th June 2019. Now material consumed, it should be a correction, it cannot be consumed. It should be material purchased or material sent to the site. Okay. Or if you make the correction, material sent or material purchased. We purchased material worth 1 lakh rupees. It will come on the debit side of contract account. Wages paid, debit side. General expenses, debit side. Plant purchased, debit side. Material on hand 36/2019. Closing balance will come on credit side. Wages accrued, we will plus in wages, put tick on wages paid. Work certified, credit side in work in progress. Cash received will have no entry, but here percentage cash received is not given. So in the workings, we will use actual figures in the formula of CR upon WC. Work uncertified credit side, this will also be used in the workings. Okay, cash received. Work uncertified credit side. Depreciation on plant, no entry, but we can find closing balance of plant from this. 50,000 of plant purchase, 5,000 depreciation means what will be the closing balance? 50,000 minus 5,000, 45,000. This 45,000 closing balance of plant we will write on the credit side. So depreciation on plant will have no entry, but from plant purchase 50,000, if you subtract depreciation of 5,000, then closing balance 45,000 will come on credit side. Now this is what is important, very important in the question. The above contract contained an escalation clause which read as follows. Escalation clause, that if the price goes up, the contract price will go up. So what is that escalation clause? Understand it. In the event means if. Okay, in the event simply means if. If price of materials and the rates of wages, these two things, increase by more than 5%, means as I said, beyond certain limit, right? So here the contractor has agreed that up to 5% he will not increase the contract price. If the price of materials and rate of wages increase up to 5%, he will not make any change in the contract price. But if the price of materials and wages goes up, increase by more than 5%, then only escalation clause will apply. Then the contract price will be increased accordingly by 25%. 25% means full increase will not be done. Like here the increase was 19754.5. Full increase in contract price will not be done. It will be done 25%. Means contractor will also bear 75% loss and 25% he will recover from the contracting. So the contract price will be increased accordingly by 25% of the rise in cost of materials and wages beyond 5% in each case, because up to 5% is not going to increase. So whatever is the price increasing beyond 5%, in that 25% he will recover from the contracting. Okay, we'll be doing this in the workings, so you'll understand it exactly when we make the workings. But what is the escalation clause? What is the condition in the contract? That if the price of materials and wages are increasing up to 5%, contractor is not going to charge anything extra. But if the price of materials and wages increase by more than 5%, then whatever is the increase beyond 5%, 25% of that increase he will recover from contracting. Means, suppose the price of materials increase by 8%, then up to 5% he will not charge anything. Now 8% means what is beyond 5%? 3%. Just an example, beyond 5% in 8% is how much? 3%. In this 3% also, the contractor will increase the contract price further by only 25%. In this 3% also, contractor will increase the contract price by only 25%, means 0.75. That is the meaning of this. We'll see it exactly in detail when we make the workings. But whatever is the increase, entire increase will not be done in the contract price. Whatever is the increase beyond 5%, further beyond 5% increase, 25% will be increased in the contract price. Look at that sentence again. In the event of price of materials and rate of wages increase by more than 5%. If they increase by more than 5%, then only escalation clause will apply. The contract price will be increased accordingly by 25%. But 25% of what? Rise in the cost of materials and wages beyond 5%. So if I ask you that suppose wages price goes up by 12%. Okay, wages price or wage rate goes up by 12%. Then up to 5%, no increase in contract price. How much is beyond 5%? 7%. Then how much contractor will increase the contract price? Not full 7%. Further, he will increase 25% of the same. Anyway, we will see in detail when we make the workings, but look at and read this paragraph again so that you get the clarity. It was found that since the date of signing the agreement, the price of materials and wages both increased by 25%. Actually, the price has gone up by 25%. So up to 5% out of 25%, up to 5%, he will have no escalation. What is beyond 5%? Total price has gone up by 5%, 25%, so 20%. In this 20% only escalation clause will apply, just for your understanding. The actual price of material and wages have increased by 25%. So up to 5% escalation will not apply. In this 25% rise, what is beyond, like I said, 8% means what is beyond 5%? 3%. 12% means what is beyond 5%? 7%. So 25% means what is beyond 5%? 20%. In this 20% rise, whatever takes place, further 25% of that will increase the contract price. The value of work certified does not take into account the effect of above clause. Prepare contract account. Don't worry, the things are very simple when we make the workings. All of you pause the video and make this format. Contract account of Deluxe Limited for the year ending. Keep it in mind. Here the year ending is 30 June 2019. So pause the video and make this format, and later on when we make the workings, you'll understand escalation clause perfectly well. No need to worry. Make the formats first. Yes, I hope all of you would have done the formats. So be attentive now. Very first, contract price 5 lakhs has no entry. Materials sent 1 lakh, we will write on the debit side. So look at on debit side, 2 materials sent 5 lakhs, or purchased can also be written. Anything can be written. Then after materials purchased, we have wages paid 45,000. There is a tick, means you will write it in inner column, wages 45,000, 2 wages paid 45,000, inner column. Now in that we will add plus accrued. So what is the amount of accrued wages? Here we have it. Accrued are 5,000. We'll add that. So all of you write down plus 5,000. So 45,000 plus 5,000, that will come to 50,000. Then general expenses 10,000 we will write on the debit side. Okay, general expenses 10,000 will come on the debit side to general expenses 10,000. Then after general expenses we have plant purchased 50,000, that will also come on the debit side to plant purchased 50,000. Then after plant purchased, we have materials on hand closing balance 25,000, that will come on the credit side. So buy balance carried down, leave some space for other items, then you can write it down. Okay, buy balance carried down, in that materials 5,000, no 25,000. So materials can come directly in the outer column, 25,000. Then after materials, wages accrued we have already added. Work certified 2 lakhs will come on credit side in work in progress. So I'll write down by work in progress. Within that we will write work certified. Okay, by work in progress. Work certified is 2 lakhs. Okay, work certified is 2 lakhs. And then work uncertified, cash received has no entry, work uncertified is 15,000. So 2 lakhs plus 15,000. Outer column will get 2,15,000. Then after work uncertified, depreciation on plant we discussed there's no entry, but from that we find closing balance 45,000, which will come on credit side. So that we will write in balance carried down plant. In bracket you can show 50,000 minus depreciation of 5,000. So outer column 45,000 is closing balance of plant. Now the above contract contained an escalation clause. So first let us find the escalation. Okay, one more thing you can write in the notebook in the beginning somewhere, that the entry of escalation clause will come in contract account on credit side. The entry of escalation will come in contract account on credit side. Okay, what would you write on the contract account credit side? You'll simply write by contract escalation. Okay, credit side you will make the entry as by contract escalation. So this is what you have to remember. To make this entry, first we have to find the increase in contract price. So we'll make the workings. All of you write down working note 1. Now we'll have to make the workings. First working will come for escalation clause. So working note 1, escalation clause. Now how to make this workings? Understand it. Okay, we have to find for materials and wages separately. So first we do it for materials. Input, you make the column as input. Then up to 5%, no increase. Then beyond 5%, increase will take place. And in this beyond 5%, the escalation contract clause, which contract price, increase in contract price rather, will be 20%, 25%. Increase in contract price would be, as in the last paragraph you can see, last second paragraph, the contract price will be increased by 25%. So whatever is beyond 5%, contract price will be further increased by 25% of the same. Now first input is material. Okay, you have to make this in the notebook. Escalation clause, input up to 5%, escalation will not apply. Beyond 5% escalation will apply. Whatever is the increase beyond 5%, out of that, increase in contract price, what will take place is only 25%. Now materials, you all can see that materials sent was 1 lakh. Closing balance of material is 25,000. Out of 1 lakh, we could not use material of 25,000. That was left out with us. Means the material consumed was only 75,000. That's why I made that correction. That it should not be materials consumed. It should be material sent. Because if material consumed is 1 lakh, then that is already after deducting closing balance. Here 1 lakh of material sent, 25,000 is closing stock remaining with us. So we have consumed or used material of 75,000. Now this 75,000 is already the increased price. We have paid the price of 75,000 for that. And the prices have actually gone up by 25%. So this working would be done. Now understand how will we find this up to 5% and beyond 5%. Suppose the base price, quoted price, tender price of the materials and wages was 100. Okay. Now plus the price has increased by 25%. Plus the price has increased by 25%. As you all can see in this last paragraph, it was found that since the date of signing the agreement, the price of materials and wages increased by 25%. So 125 is the increased price. Now increased price is 125 means you all can say if 75,000 is what we have paid, then that is the increased price of material. Okay. So what will be 5% increase out of that? 75,000 into 5 by 125. Why 5 by 125? Because 75,000 is not equivalent to 100. 75,000 is equivalent to 125. I repeat, why 5 by 125? Because 75,000 is not equivalent to 100. It is equivalent to 125. So if the increased price is 125, then the materials we got at 75,000. So up to 5%, up to 25%, what would be the increase? 75,000 into 25 by 125. But we don't have to find 25%. We have to find 5% and beyond 5% separately. So here we will do 75,000 into 5 by 125. And here we will do 75,000 into 20 by 125. What is beyond 5%? Okay. Do it everyone. 75,000 into 5 divided by 125. 3,000. And 75,000 into 20 divided by 125. That comes to 12,000. Okay. So here you can see 75,000. What is we are interested in increased price, because whatever is the increase in that, further the contract price would increase by 25%. So what is the increase? 75,000 into 25 by 125. You will work it out. It will come to 15,000. Out of this 15,000, what is the increase up to 5%? 3,000. And what is the increase beyond 5%? 12,000. Okay. So this is the main intention of doing it this way. All of you must understand it properly. Once again, this 75,000 is already the price which we have paid. That is the increased price worth 125. So out of 75,000, how will you find 5 and beyond 5% increase? 75,000 into 5 divided by 125. 75,000 is equivalent to 125 rupees. And beyond 5% means remaining 20% increase. How will you find? 75,000 into 20 upon 125. Here if you make a simple equation, then against 125 increase is 25. So against 75,000, what is the increase? 75,000 into 25 by 125. So you are dividing by what? 125. So out of this 25%, how will you find increase up to 5% and how will you find increase up to 20%? 75,000 into 5 by 125 and 75,000 into 20 by 125. Out of this 12,000, we will further increase the contract price only by 25%. That is 3,000. By 25% it is given that the contract price will be increased accordingly by 25% of the rise in cost of materials and wages beyond 5%. What is the rise in price of material beyond 5%? 12,000. Further out of 12,000, contract price will be increased by 25%. So that is 3,000. Now exactly same way, all of you pause the video and work out for wages on your own, including accrued. Okay, wages including accrued, so that you get an idea. And then you play the video and verify whether you got it correct or not. Same way, exactly same way. Pause the video and try it on your own. Okay, I hope all of you would have done it. See here, wages are 45,000 plus 5,000, 50,000. Like materials, we did 1 lakh minus 25,000. In case of wages, it is outstanding, so we have to add it. So total wages expense for the business is 50,000. In this 50,000, what will be the increase up to 5% into 5 by 125? Well, if you do it, 50,000 into 5 divided by 125, up to 5% increase is 2,000. And what will be beyond 5% increase? 50,000 into 20 by 125. Well, if you do 50,000 into 20 by 125, what is beyond 5%? 8,000. Now only in this 8,000 beyond 5% increase, the contract price will be increased by 25%. So 8,000 further 25%. Or if you do it, 8,000 into 25%, 2,000. So for materials, we will charge 3,000 extra from the client contractee. For wages, we will charge 2,000 extra from the client contractee. 3,000 plus 2,000, how much we are going to charge extra? 5,000. This 5,000 will be recorded in contract account on credit side, as we discussed, with the name of by contract escalation. So all of you write down in contract account on credit side by contract escalation. Okay. So this 5,000, all of you write down in contract account on credit side. The entry done would be by contract escalation, and outer column 5,000 in bracket working note 1. Okay. So contract price will be increased by 5,000, means it is our income, so we'll write it on the credit side. 5,000 extra we will charge from the contractee for the same contract, because the price of materials and wages have gone up. Now we will do the balancing as we have been doing earlier. So if we do 5,000 plus 2,15,000 plus 25,000 plus 45,000. Rest of all the balancing etc. is going to remain exactly same. So all of you write on the total is 2,90,000 on both the sides. Now from 2,90,000 you all subtract 5 lakhs minus 50,000, 2,90,000. Okay, materials sent is not 5 lakhs, it is 1 lakh. Make the correction, 1 lakh. Yeah. 2,90,000 minus 1 lakh minus 50,000 minus 10,000 minus 50,000. So 80,000 is the balance remaining, that is notional profit. To notional profit carried down in bracket balancing figure. I hope everyone is clear with this. Okay. Now this 80,000 will be taken on the opposite side after the total as by notional profit brought down. So I'll write on credit side by notional profit brought down 80,000. All of you can rewind the video and revise with this escalation part again if there is any confusion, but it's very important. Okay. this workings what we have done for escalation, you all can rewind the video and revise it once again if required, but understand it thoroughly well. Moreover, it's a new point done in college, so chances of being asked in exams also increase. Now, second workings we will do for percentage of work done as we used to do it earlier after finding the notional profit. Percentage of work done is equal to work certified divided by contract price into 100. Okay, work certified divided by contract price into 100. So what is the work certified? Work certified is 2 lakhs upon what is the contract price? 5 lakhs. Okay, 2 lakhs divided by 5 lakhs into 100 is equal to 40%. For the first time, we have got the percentage completion between 26 to 50%. So here not 2/3 but 1/3. Okay, all the questions we have done were between 51 to 90. Here 40% work is only done. So what will be the amount to be transferred to profit and loss account? First time we have got this. Amount to be transferred to profit and loss account will be equal to, here 2/3 formula will not apply, 25 to 50%, 26 to 50% rather, 1/3 into notional profit into cash received upon work certified. So 1/3 into notional profit, we got 80,000 into, now here cash received upon work certified, percentage is not given, we'll take actual figures. Cash received 1,50,000, work certified 2 lakhs. So 1,50,000 divided by 2 lakhs. Doing calculator everyone. 80,000. First you do 80,000 divide by 3 into 1,50,000 divide by 2 lakhs. So that comes to 199, means 20,000 rupees. 20,000 rupees will be transferred to profit and loss account and remaining amount will be kept as reserves. So all of you write down debit side in contract account to profit and loss account 20,000 and remaining amount, so write 80,000 both the sides. 80,000 minus 20,000, 60,000 will be transferred to reserves carried down in bracket balancing figure. Opposite side after the total by reserves brought down 60,000 in outer column. Okay, and then what we write, the opening balances that will come on the debit side to work in progress brought down, that we directly write the total amount of work in progress, which is 2,15,000. So that will write in the outer column. And further we will have to balance brought down. In that we will write materials and plant balance. So all of you can see in the first part, material closing balance 25,000, plant 45,000. These two will come in the opposite side, 25,000 and 45,000. So rest of the solution is exactly similar. Only new thing in this question is calculation of escalation, means contract price should be increased by what percent, what amount, and that whatever contract price you are going to increase it by, that entry will come in contract account credit side, so that will result in your income. Okay, so if you require, then you can pause the video, rewind it and hear that, listen that part of escalation once again. Now question 25B and 28A I'll discuss and it will be your homework entirely. They are exactly similar to the questions we have been doing in the past lectures. Simple ones, basic ones, lot of practice has been done. So entirely you all will be trying on your own. I'll just make you do the markings. Look at it. The following details are available from the books of accounts of a contractor with respect to a particular construction work which has a contract price of 99 lakhs. So no entry for that. Okay. it will be used in the workings. For the year ended 31st March, here is also not given, so you simply write 31st March. Cash received will again have no entry. From contract is 71 lakhs, but 80% of work certified. So work certified will come in contract account on credit side and will make the workings. When work certified is 100, cash received is 80. So with 71 lakhs, how much? 71 lakhs is cash received into 100 divided by 80, you'll get the work certified. That workings will be done. We have been doing it in the past lectures. Direct wages paid, debit side. Direct expenses, debit side. Materials issued, so debit side. Cost of work, uncertified, credit side. And closing balance of materials at side, credit side. Very simple question. Prepare the contract account. Small and simple. Question 28A. The following details are available from the books of accounts of a contractor with respect to particular construction work for the year ended 31st March 18. Contract price, no entry, to be used in the workings. Establishment expenses, debit. Depreciation, no entry, we have to write opening balance debit side or plant side debit side and closing balance credit side. Materials consumed, debit side. Direct wages, debit side. Indirect expenses, debit side. Cost of extra work, debit side. Cost of plant installed at site, debit side. Work certified, credit side. Cash received, no entry. But from this again, 92% of work certified, so you'll find the work certified and that will be recorded on credit side. Okay, make one correction. Instead of 92%, make it 90%. Okay, it has been normally 80%, 90% only. And you make the workings 2 crore 95 lakh 20,000 into 100 divided by 90. Head office expenses, debit side. Cost of work, uncertified, credit side. Direct expenses paid, debit side. And closing balances, materials at side, credit side. Accrued direct wages will add in direct wages, so put tick on direct wages. Accrued direct expenses will add in direct expenses, so put tick on direct expenses. Here we have. And plant at side will come on the credit side. So you all can see 24 lakhs and 22 lakh 32,000. That is a difference of how much? 24 lakhs and 22 lakh 32,000. 1 lakh 68,000, that depreciation already given, which will have no entry. It will automatically get recorded. The difference of these two amount, 1 lakh 68,000 of depreciation, will automatically get recorded. You are required to prepare contract account for the year ended 31st March 18. So similar questions we have been doing in past, 25B and 28, all of you try on your own. That will be all in this lecture. Next lecture we will finish with the contract account, remaining 2 questions. The chapter will get over. Bye everyone, take care, see you in the next lecture.